Welcome to my kitchen, the commodity kitchen, where we sprinkle life into our food. I'm a chef, you're a chef, we're all basically chefs. I guess you could be a baker if you want. Remember, more can be less, and less can be more. The main focus of this video, as you probably already know from title, is going to be iron ore. Iron ore's price going up. So let's just get right into this article. This is our main article, but we can't continue going off on a tangent because that's kind of the thing that I can do really well, apparently. So the article's title is, Hopes for a rebound in China's property market have been driving up the price of iron ore. China is the third world largest exporter of iron, so they are saying that its property market can dictate some of the prices of iron ore. But let me just address the importance of iron, which this article goes ahead to just describe. Iron ore is pretty important. You're about to hear some things why, although I'm sure you can probably already guess. So, iron ore is one of the main ingredients that goes into steel, and steel, of course, goes into just about anything and everything. Ships, cars, building, appliances, you name it. Steel's behind that basic foundation, taking care of everything. The price of iron ore has risen nearly 39% over the past year, according to data from the Federal Reserve. It's still well below the all-time high it hit in the summer of 2021, but the commodities be getting more expensive. I even have written my notes just to clarify even more importance of iron. Iron ore is a source of primary iron for the world's iron and steel industries, so you can already tell the very great importance it has between both, since it does go into steel. So basically both industries are like, hey, we need iron, so if anything happens with iron, it's gonna kind of affect us, you know. It's essential, again, for the production of steel, which is essential to maintain a strong industrial base. And I also have written some of the largest iron exporters. I already said that China was the third largest exporter, but the first is Australia and the second is Brazil, so something to keep an eye on. If anything happens to their iron, then those other countries that import a lot of it, like China, even though it kind of exports, it exports like 70, not 70%. 70% is its global demand for iron ore, so sorry about that. But it does still need it. So it accounts for, again, 70% of global demand for it, and until recently, its economy wasn't looking so good. China's crisis-ridden property market once demanded a lot of steel, but lately its government has been making aggressive moves in order to stimulate its economy. I could be wrong, but I think it could still be in like a deflationary period, so they're trying to prevent that because no one wants a recession. No one wants a recession. And there's even a quote. So they've had like 3 rate cuts this year already, and so that's been helpful, I think, in balancing some of the fears about China. Beijing told its steelmakers this year it wouldn't enforce an annual cap on production, which would be aimed at curbing carbon emissions, and iron ore supply has not kept up with the resulting demand. And when there's less product and more demand, already the price is going to go up for that, which is good news if you're really investing in that iron, and you can already tell that things could be looking to go your way, and that demand could continue going up, then you're gonna be feeling pretty nice and dandy, you know what I'm saying? The University of Houston finance professor Craig Perron, hopefully I said that right, don't know if I did, says higher ore prices will affect steel made from scratch, which makes sense, right? They need iron for steel. So if iron's price is going to go up, it kind of stands to reason steel's would too, because it's going to be a little bit more expensive to get iron, which means it's going to be expensive in turn to get steel. That should make sense. Good moment to say that you should join a seat at the table of our kitchen through subscribing and leaving a like. I'm not a financial advisor. I'm really not too special, I would say. I'm just kind of giving my thoughts. There's many things I'm probably not looking at because there's so many different angles and viewpoints and details that I'm most likely missing out on. But I'm just giving my thoughts, and then you're just choosing to listen in, and that's completely fine. But not a financial advisor. Anyways, it's like how can I rephrase this? Sometimes I like to rephrase things or like put an example. So if I'm trying to make a cake and eggs price is going up while everything else is staying the same, then it's going to be more expensive for me to make cakes because now it's gotten more expensive for me to get eggs for the cake. You could even just swap out eggs with like milk or anything really. So as you can see, domino effect. Exactly. You already know. I'm having fun saying this. I didn't even know why. This increase in price would have some impact on prices of goods generally in the US, but not a big one. I even have written down here that some countries that import iron the most are Singapore, the US is on there, and Netherlands. But it might not have as big an effect on the US, but that doesn't mean it still won't have an effect. I mean, any effect should be taken into consideration. Even the smallest of things can mean the most important of things, if that makes sense. And this article really just kind of goes over China's economy and how that will affect iron and things like that, because if they're not having a really good time, they're gonna try and focus a lot of their attention on combating deflation, if that's what they're experiencing. Don't quote me too much on that, but I think so. So whatever bad economic situations they may or may not be dealing with, they're going to be trying their best to combat that as much as possible. And so that might mean slowing some other things that could be getting in the way of that down. So with the rate cuts, it's going to make money, less expensive to have. It's going to try and stimulate the economy because consumer spending, from my understanding, helps a lot and aids a lot in the economy, staying alive and keep on rotating and swirling around and all that stuff. If people aren't really spending things, then companies and businesses aren't getting money. And if they don't really get enough money, they can't really pay their workers. If the workers don't have a lot of money and the companies know they can't really pay as many workers, they're going to cut off workers. The workers are going to have to get fired. And basically, it's just this whole cycle. If one part of the cycle stops, then the rest of the cycle can't really continue swirling and going all around because, well, one of the major processes is stopped, So it's like if one part's affected, really the whole thing's affected, and they want to keep that economy moving and flowing because no one wants a recession. No one wants that. China is dealing with stubbornly high unemployment and shrinking factory activity. And so, it's also interesting to note that the rallying iron ore prices seems driven more by speculation than reality because the iron ore market has been going up while the Chinese stock market has been going down. So people are investing more in things that have, that value. What I've definitely noticed, through doing research of other things like coffee prices, sugar, and wheat, is if people just don't ignore the fact that maybe they're special at these kind of predictions. Just think of them as normal people. If somebody knows that there's even the slightest chance that things could go wrong, they're going to try and take countermeasures to make sure that they stay as safe as possible. And also, if somebody knows that things are going to be looking better in the future, they're again going to try and take actions to make sure that they can benefit off of that. So if I know that some asset's price is going to go exponentially high, then why not get it now when I know that its price is going to be so much more than it was before, you know what I mean? And if I also likewise know that an asset's price is going to go kerplunk all the way down, then, if I have some of it, I'll probably maybe choose to sell it right then and there, because I know it's going to go down, so there's no point in waiting unless I know it's going to go even more, even higher than it was before. I haven't chosen out the food of the day, but don't you worry. Because in just a moment after this ends, I'm gonna choose the food of the day. I know you enjoy the food of the day. I enjoy the food of the day. It's delicious stuff. Also, quick point out. Look at this. I've been waiting for this. My whole chef's attire. This completes the look. This is what I've been waiting for. This makes me feel really, really happy. More happy than you could believe. So, you know. Also, no, this doesn't really have anything. It's actually kind of nasty, but you know. Thank you for sitting at this table with me, for enjoying this quick meal. I know this might not have been too filling, mostly me kind of just adding in little appetizers, little things for thought, for you to munch on and stuff. So I hope you enjoyed this. We've got shorts too. We've got also these snack little bite-sized newses if you like to hear that. You know, just quick things for you to learn about, for me to kind of learn about. We're all learning together. We're all chefs learning stuff. Yeah. Hopefully you come around for one of my other news stuffs. Yeah, that's basically everything I wanted to say. Thank you. Today's food of the day is congee, a form of savory rice porridge. It's made by boiling rice in a big pot of water until the rice softens a lot. Its thickness can vary, as with most rice foods, I would kind of say, at least for mine, from a more oatmeal porridge, Western type thickness, to more of a gruel. So it can really depend based on who's cooking it, as do most meals.